Good evening, students, and welcome to today's class. Though I am not the concerned person who will be taking today's class, Vishal sir will be taking. However, I have certain requests to make to all of you. That's why I'm here. I am CA Shilpa Agrawal, your financial reporting faculty in Board of Studies. We are going for a survey. This is an international survey which is being conducted by International Panel of Accountancy and Education. Since ICAI is a member of IFAC, International Federation of Accountants Confederation, so being part of that confederation, ICAI is conducting we are taking forward the survey of IPA, that is IFAC accounting body. So that survey requires students also to participate because you are also a stakeholder for this institute, one of the stakeholder of the institute. So one of the pillar of the important pillar of the institute. See what, let me just brief you what IPA, that is International Panel of Accountancy and Education, do. They form international education standards, and these international education standards provide the broad guidelines for every member body to draft and design their course curriculum. So being ICI being a member of this IFAC body, we are also bound to comply with the international education standards, which describes the broad framework for our course curriculum. So our revised course curriculum, which has been launched from 1st July 2023, is in compliance with the international education standards. However, in the era of this advent of technology, basically artificial intelligence, they are also undergoing they are revising their international education standards. Earlier, they have revised on aspects of incorporating sustainability and technology. Now they want to incorporate the aspect of artificial intelligence. On taking that into consideration, that this is the future prospects for the profession, and how a professional who is qualified have to deal with the artificial intelligence while executing your professional activities or duties. Okay, so they have set up some strategies. Those the strategic priorities they have set up, they have discussed within their members, and now they have come out with the concept paper. That draft concept paper will be sharing with you along with the feedback form, and they are looking for the students who are one of the important stakeholder of our course curriculum, our CA profession, to participate in that. So in that regard, I request all of you, and I really want everybody to participate because this will show your international presence in this survey. So I want everybody, please, it's a request basically that please go through that document. That document is of almost 20 pages. I understand it will take your time, but hardly if you devote 1 hour, 1.5 hour, you'll be able to understand what is there. Otherwise, tomorrow morning also, I'll try to come and brief the document also to all of you. Okay. So based on that document, you have to fill the feedback form. Feedback form contains only 4 questions on which you have to give your comment. So first of all, I'm sharing with you the feedback form. This feedback form, it's sharing is going on. Okay, the feedback form is visible on your screen. Okay, hope it is now visible to you. See, you have to fill, this is an outreach on draft pen and strategies feedback template. You have to fill your student name, you have to fill your name, registration number, and email ID along with the organization. Organization is ICAI because this international survey is conducted by many professional accountancy body, not only ICI, it will be Cost Accountants of India also, it will also be with different countries like Nepal, Pakistan, many, well, there are 137 countries which will be participating on this international survey. So we want our students also to mark the presence. So these are the 4 questions which they have to reply. Just a minute, huh? Why I'm not able to scroll it down? These are the 4 questions on which you have to give your reply, and I request all of you to please go through that, give your reply. It is not that we are going to disclose your name in, but we'll be mentioning that these are the students' observation and students' feedback. So please fill this feedback form. It's a small form. Only 4 questions are there. However, a document which I am going to share, this is the document based on which you have to fill the feedback. You have to give your observation whether are you in agreement with the priorities set by the IPA, that is the IPA strategy. These are the 4 strategies, 4 strategies on which you have, and details of these 4 strategies are given in the forward pages. First 3 pages, 3.5 pages explains the broad aspects of these 4 strategies, and later on difference between first and second strategy is also mentioned, and later on all the strategies priorities which with strategic priorities have been explained in detail. Okay, so you have to just go through that and fill it. Since this survey is for a very short period, and so we request you to devote the time today or tomorrow and fill this form by tomorrow. And I'll be sharing these documents on the WhatsApp group also. So students, please go through this, and I want good number of participants to fill this form. Okay, this is going to help you in designing the course curriculum, which will affect your professional competency. It will build your professional competencies, because once it is finalized and incorporated in the curriculum, it is going to directly impact you. It is not indirect impact, it will be a direct impact on you. But that's why, because you will be the students who will be going through the course curriculum and this thing. Okay, so I want all of you to be wholeheartedly go through this with open mindedness. Just go through the document and provide your comments. Okay, no, not necessary that you have to give a big answer, not necessary, but give the comments even in bullets. That will also suffice, that will help us. Okay, so students, I hope everything is visible to you. This is the strategic priority 1. Similarly, we are having 4 strategic priorities, and all have been explained in detail. And risk and challenges in each and every priority that has been mentioned. Please go through that, and it won't take much of time. It is saying 26 documents, but it is almost on running into 220 to 22 pages. Okay. So students, I'll be coming again tomorrow morning in the tomorrow morning session, and we'll be briefing you about the document. Right now, I'm just sharing the document on the WhatsApp group to you, and I request everybody to fill the feedback form and send it through the mail. You have to send your feedback form through the mail at bos@icai.in with CC to Shilpa, SHILPA, Shilpa @ICAI.in. Okay. So students, you can we'll share the email IDs on where you have to fill this form and share with us. I want these feedback forms to be shared through mail only. Okay. So please fill this form. I'll be sharing the email IDs on the WhatsApp group also. Okay. Thank you, students. Sir, over to you. Thank you for giving me the opportunity. Thank you.
Thank you very much, ma'am. Students, I'm sure you all would have noted this very important input given by ma'am. And please, students, it is a humble request that we all show our presence and make our mark in all the endeavors of ICAI. And this is an excellent opportunity for you all to contribute to that particular topic paper, plus to one of the pursuits of ICAI. So with this, let me take you to our today's session. So as we had discussed, today's session would basically be dealing with some questions, some important questions from the perspective of exams, which we had planned to engage once we complete our substantive provisions, which we have done. But as also discussed, before I take you through the questions and we discuss on the particular questions and the manner of writing the answers, the presentation and exams, I would first like to take up your questions, so that firstly, once I answer your questions thoroughly, then we can take up the questions which I have identified, or which we have, you can say, made a bouquet for your deliberation and for your understanding. So students, let us start with your side first. Let me know what are your questions. Let me know what are your doubts in any topic relating to GST, so that we can start with our discussion, today's very important topic. and also take up the important questions for practice. Yes, students. Resham, Siddharth, Neha, Priyanka, Smriti. Tell me. No questions from your side? Okay. Then let us do one thing. Let us then go to our topic for deliberation. Is my screen visible to all? Not visible. Gallery share. So students, some questions have been compiled here for our deliberation. Okay. So we'll start from here. Go through this question. I hope the entire question is visible. Yes, now it is. Go through the question. I want you all to read question this one, which starts from here, question 11. Yeah, so it starts from here. It is running into around 2 pages. I have tried to. Okay, yes. Now, before we start answering, we have to first understand how to read a question. Now, see, in the exam, when the question will come, one, it may be a very lengthy question. That is why I purposefully started with a lengthy question, even though there are a few small questions also. But I thought, let me start with a lengthy question because psychologically it plays a lot in the exam when you have a lengthy question. No problem. So, first thing is we need to understand how to read a question. Second thing, we need to also understand how to approach a particular question. I'll request one thing, do one thing, because later on I'll be opening my writing pad, because of which it may be possible that I have to switch the screen. So just take a screenshot of this question so that even if I'm switching the screen, or if let us say I'm on page 1 and you want to go back to page 2 or vice versa, it will be easy for you. So just take a screenshot of this, students. Hope you all have taken the screenshot. ठीक है. Now, How to read a question? See, generally what I do is when a question is very lengthy, I first go to the last part of the question to identify what exactly is asked in the question. It helps me in two ways. First, it helps me in deciding whether I should take up this question first or not. Generally, I do this at the start when we have those first 15 minutes of the paper. What I do is I first read the questions to identify which questions I'll be taking first, which I'll be taking second. That is to prioritize the questions so that I will start answering in that fashion. So, firstly, by reading this part of the question, it helps me in identifying whether I have to take up this question first or at the later stage. Second, once let us say I have take this question after reading this part, and now I want to solve this question. Again, I'll read this part of the question first. What is this part? This part is the part where they have asked you the question. What exactly is expected? Now, when I read this part first, it gives me a broader picture as to from which angle I have to look at the question and the data. Because the same question, the same data can be looked at from the angle of supply, from the angle of time of supply, maybe from the angle of valuation. So what exactly this particular question is dealing with, that is more clear to me. So that particular picture, that particular frame is created in my mind when I read this part of the question. This I do for all subjects. Even if you have a case study type question, the last one or two lines, they mention what exactly is expected. So first, it will help you in ticking the questions for selecting the priority. Second, it will help you when you are reading the question for answering. That time also it helps you in precisely reading the question, precisely reading the data. So let us with this approach start. So what is the requirement? Given the above available facts, you are required to compute the following. So what are the things they are asking me to do is, first is input tax credit credited to the credit ledger. Be very clear with the question language. See, one is you need to find out how much credit is utilized. One, the question may ask you to find out how much tax is payable, but none of this is asked. Not they are not asking how much is utilized. They are not asking how much tax is payable. Rather, they are asking what amount of ITC would be credited to the ECL. Now, I'm sure if you all are now by now well versed with the topic of ITC, you'll understand that when this question is asked, basically out of the whole chapter of ITC, it is mainly focusing on section 16, 17, which deals with the eligibility part as to whether a particular ITC is eligible, whether a particular ITC is available. So when they are asking me to find out how much ITC is credited, so basically it is more about the eligibility part which I have to test, because what is eligible, what is available can only be credited. Second is they are asking me to identify, to compute the amount of common credits. Now, the moment I read this common credit and I now know that this topic is dealing with ITC, this question is dealing with ITC, immediately section 17.1 and 17.2 should start clicking in my mind. See, this is how you have to develop this particular special ability, I'll say, to approach the exam question so that one, your answer is very precise. Two, in the given limited time, you are able to approach the question thoroughly. And three, you get the maximum possible marks. So when I read the word common credit, what starts sticking in my head is 17.1, 17.2, because that is where common credit point is applicable. Then it says ITC attributable towards exempt supplies out of common credit. Now, the moment I read this, what starts sticking in my head is Rule 4243. Because in that Rule 4243, I am given the calculation which helps me find out of total common credit, how much is attributable to the exempt supplies. Then finally, the exempt ITC, the eligible ITC out of common. So we all know out of total, when you deduct this C amount, this will be left. And last is net GST payable. So virtually they have asked me everything. Further, so once I read this, I know that this whole question is revolving around firstly section 16 and then section 17.5 and then 17.1 to read with the rules. Fine. So with that frame in my mind, now I'll be looking at the question. So I will not venture out into determining whether it is supply, what is the time of supply, what is the valuation. No need. We have to stick strictly to the ITC part. Now, since I'm going to now solve the question, let me also go through the notes, which will be helpful when I'm reading the question. So GTA has not exercised the option to pay tax itself. So we all know that GTA is given an option, either the GTA will pay tax, or if the GTA exercises the option of not paying tax, then I have to pay the tax under RCM. So the tax is payable on such services at the rate of 5% because that is the rate under RCM. Rate of GST in all other cases is 18. So this they have given for the purpose of our benefit. We need not get into the rate identification. Generally, that is not required in the paper. They will give you the rate. The best part of this question is ignore CSI for the sake of simplicity. So here directly we'll say GST 5%, GST 18% will not get into the breakup. All inward supplies are procured from registered. Great. Wherever applicable, amount given are exclusive of tax. So these are the basic amounts on which we have to multiply 5, we have to multiply 80. And then subject to the information given above, assume that all other conditions necessary for availing ITC have been fulfilled. So where nothing is given, you presume that the conditions for ITC availability has been fulfilled. Okay. Now I have a clear picture in my mind as to what the question is dealing with and what I am required to focus on. So with this realization, let us go to the details of the question. Pay attention. So all-in-one store is a retail chain, a departmental store having presence in almost all metro cities. Both exempted as well as taxable goods are sold in such stores. So you can visualize any store, any mall for that matter. So that will be the best practical way of approaching the sum. The store operates in a rented premise. Fine. All-in-one store pays GST under the regular scheme. Fine. So the store is under regular, not composition. Fine. Anyways, if it would have been under composition, all these questions would not have come into the picture. Now, in Mumbai, the store operates in a rented complex, a part of which is used by the owner of the store for personal residential purpose. I'm sure now here you are able to identify what will be the use of this, correct? Because this question is revolving around the availability, eligibility, then common credits. So this portion of the question will be helpful because this will help us in removing the effect of what is not business, what is personal. So what it says, the store operates in a rented complex, a part of which is used by the owner of the store for its own personal use. Fine. All-in-one store Mumbai furnishes the following details. What are the details? Aggregate value of various items sold in the store. Taxable items 42 lakhs, exempt wide notification 12 lakhs, and items which are not leviable to GST is 3 lakhs. Now just some quick questions. So be ready with answering. Either you may unmute an answer or you may type an answer. In this, what will be the value of exempt supply for the purpose of our calculations? Students, what will be the value of exempt supplies? One answer, others? Yes, I'm waiting for others to answer. Siddharth, good, you're right. What about others? Yes, others, please pitch in with your answers. Okay, fine. So 42 lakhs is the taxable value, no doubt. For the purpose of reversal, the value of exempt supply would be 15 lakhs. In fact, if you remember, this was our discussion at length even in the previous class, that whether non-taxable items which are outside GST, whether that will also be covered in exempt supply. And we had a discussion that the definition of supply even includes non-taxable supplies. So even items which are not liable to GST, like liquor, which I'm assuming from the departmental sold, liquor is also getting sold. That is what is covered here. So that will be exempt supply. So the value of exempt supply will be 15 lakhs. Proceeding further, Mumbai store transfers to another all India stores located in Goa certain taxable items for the purpose of distributing the same as free samples. Okay. The value declared in the invoice for such items is 5 lakhs. Such items are sold in the Mumbai stores at 8 lakhs. So this deals with your outward side transaction that you have transferred to another store in Goa. Now, one thing is for sure, your store is in Mumbai, the other store is in Goa. So definitely the Goa store would be having a separate GST number and it is under the same PAN because you are the same departmental store. So what is important is you will be liable to pay GST on this. This is a Schedule 1 transaction, rather not even a Schedule 1 transaction, not required. Why? Because they have put a value. So it is not even a Schedule 1 transaction, it is a regular supply transaction. Now in this particular case, the only challenge is relating to valuation, whether the value will be 5 lakhs or whether the value will be 8 lakhs. Anybody can answer me this, whether the value will be 5 lakhs or whether the value will be 8 lakhs. Okay. Mukesh has given me one answer. Resham has given. Siddharth says, very good. So all three of you are correct. Mukesh, Siddharth, Resham. The answer should be 8 lakhs. And in this, Siddharth has given me the reasoning also. See, generally, students, whenever you make supply to your related person, the valuation rule says that if your recipient, which is your related person, is eligible for full ITC, then your value will be the amount which you have shown in invoice, which in this case is 5 lakhs. But this is if your recipient is eligible for full ITC. However, where your recipient is not eligible for full ITC, in that particular case, the value has to be determined as per valuation rule, which in this case will be open market value, which is 8 lakhs. So the correct answer for this is 8 lakhs. Next, aggregate value of various items procured for being sold in the stores. Now, we are talking about the items which are procured. So these are the purchase values. Taxable item 55 lakhs, items exempt 15 lakhs, item not taxable 5 lakhs. Now, from this, we'll have to identify the GST amount so that we come to know how much is our credit. Freight paid to goods transport agency for inward transportation only of taxable items is 1 lakh. Again, we have to compute the GST on this. Freight paid to GTA for inward transportation of exempt items. Freight paid to GTA for inward transportation of non-taxable items. Monthly rent payable for the complex. Sorry, monthly rent payable for the complex 550. 1/3 of the total space available is used for personal residential use. Again, for all this, we have to compute the GST component and all this will become our ITC part. Sorry. Activity of packing the items and putting the label of the stores along with the sale price has been outsourced. The amount paid for packing of all the items is 2,50,000. Again, this is one of the services which we are availing, which is liable to GST. Salary paid to regular staff 2 lakhs. I'm sure everybody knows that there is no GST on salary. So this will have no GST implication. GST paid on inputs used for personal use is 5,000. Okay. GST paid on rent-a-cab service availed for transportation of employees, which is not obligatory. We understand what is the impact of this if it is not obligatory. GST paid on items given as free sample. Okay. The rate is 5 and 18. So students, so these are some details. Now with these details, let us go to the working part. of GST will be credited to the credit ledger. Then we have to find out the common credit, and also we have to find out the ITC attributable to exempt, ITC eligible amount of ITC common, and finally the GST payable. So let us start one by one calculating the different things. Start using your calculators parallelly. I have also started doing the same. Okay. So firstly, let us find out how much would be your GST on all these independent items that we have in front of us. Start using your calcs and start making a note of this so that we can compile and find out our final answer. Okay. So whatever I've calculated, I'll just put down here so that everybody can understand what we are doing. So see, first is this 42,000. For this 42,000, save it as a PDF. Is my PDF visible to all students? I've converted the word to PDF so that I can write on it. Yes, students, is my PDF visible to you all? Okay, so it's still visible as Word file. Second. Yes, now I think it should be visible as PDF, correct? So let us go to the working. So 18% of this is my first value, correct? $42 lakhs into 18, 756 nil. And there would be VAT, but we are not concerned with that because we are limiting our discussion only to GST working. So I'm not getting into the VAT part. Great. So 756 is my output tax. Here we have already discussed that this will be my value. Now, aggregate value of items procured. Now, when I'm saying items procured, these are my purchases. Again, 18%. So it is 9,90,000. Exempt nil. VAT, which is not of our interest right now. Freight paid. Now you have paid freight on all these three things, and we have paid it under RCM. So 5,000, 4,000, and 1,000, right? 541. Correct, students? I hope we are on the same page. You are also doing the same working what I am doing. Now, monthly rent payable for the complex is 550 and 550 monthly rent. Okay, anyways, we are doing calculation monthly only. So into 18%, and it will come to, here we had 9,19,000. So here it will be 99,000. Okay. Then we have done some packing. We have outsourced this. So again on this 18% you would have spent. So how much it will come to? It will come to 45,000. Salary paid. This is no GST. GST paid on inputs for personal use. Okay, this is already GST amount. This is again already GST amount, GST amount. Okay, fine. Now, input tax credit credited to the ECL. First question. How much is the amount of input tax credit credited to the ECL? Now see, in my answer paper, when I'm solving this question, I will go sub question number wise. Be very particular about the sub question number. So it is capital A. So my answer will be capital A and heading would be ITC credited to electronic credit ledger. Okay. Now, my question to you all is we have identified the GST component of all these items. So up to this point is my outward supply. So for the timing, I'm leaving it. We start from here. Now, I have paid GST on so many items, out of which some you can actually see are not related to business. They are either personal or they may be related to non-GST items or to exempt items. My question to you is, when I read the first question which says, find out the amount of GST, correct, which will be credited to my electronic credit ledger, whether all these items should be considered or only those items which are applicable to business, which are applicable to taxable supply should be considered. I hope my question is clear. Students, I hope my question is clear. I repeat my question that whether I should consider all items. Mukesh, you are saying yes, but yes for what? Whether I should consider all items or I should consider only the items which are for business and for taxable supplies, and I should ignore the items which are for non-business. Yes, all items. Siddharth has given me one answer. He is saying only applicable to business and taxable. Resham is saying ignore items of non-business. Okay. See, this is where understanding the law minutely is very important. If you read the law, the amount, or rather first question, the question is how much amount is credited to the credit ledger. The answer is all. See, when you see the returns, you will find that in your GSTR3B, which is your return, all amount your GSTR2A2B are entirely first shown in the GSTR3B. And then out of that, we will be removing items which are either non-business, which are either personal, and out of the common, which are attributable to exempt. So the balance amount is the final net ITC, which is available for setting off. So the answer is, see, that is why reading question and understanding the question properly is very important. The question was, what is the amount which is credited to the electronic credit ledger? So it should cover all your items first. And then from that, we should identify what items will not come in the credit ledger either because they are non-business. So firstly, all the items which are coming from my 2A, 2B will come to my GSTR 3B first. So in short, I will first add up all the items GST ITC which is appearing in your screen just for the purpose of saving time so that we can solve more questions. I won't be writing out each of the items, but in my answer, I will write like this. I will write GST on, and then I will make a list of all these things taxable. Then here freight paid, then GST on monthly rent, GST on packing. So I will give the heading as GST on, and then I'll make a list of all these items. This will become the total ITC which is available. And if you remember rule 42, in the language of rule 42, this is called as your T, sorry. And from that, we reduce various items. So we come to the common ITC. Correct? See, Siddharth, your point is right. You are saying that inputs which are for personal use will not be created to electronic credit ledger. See, understand one thing. I agree to your point. I'm not saying that it has to be finally taken as credit, but the point is when we are dealing with our returns, in our returns, how the returns are designed, that whatever purchases our suppliers are uploading, and they have said all my suppliers are registered suppliers. So it means all these purchases are from registered suppliers. So they are filing their GSTR1. It is uploading or it is, let us say, appearing in my 2A, 2B. And from my 2A, 2B, it is going to my GSTR 3B, table 4, which deals with ITC. In that, it is appearing in my ITC available or in my total ITC available. And then from that, we will show it as whatever is reduced. So technically, it is coming to my ITC ledger first. And from that, whatever I feel is non-business. Because see, the portal does not know what is non-business. Understand this. The portal does not know what is personal. When you have paid rent, whole sum for entire property, how will the portal know that 1/3 is personal? That you know. So firstly, from portal, everything is coming to your GSTR 2A to B. Through that, it is coming to your ITC. And in that, you are having the responsibility of removing what you feel is non-business, etc. Are you getting my point, better? Superb. So let us make a total of this. So I can see you all also kindly use and let us find out the total. So 990 plus 541 99 45 then 5 then 4 then 4. Okay, fine. So my total comes to 11. Yes, correct, Mukesh. I'm getting the same total coming to 11 lakhs 57,000, which is also called as T in our rule 42. Now, What is my next question? I have to find out common credit. Now, if you remember, how do you find out common credit? Out of the total credit T, you have to reduce T1, T2, T3, T4. What are these T1, T2, T3, T4? One is which is personal, two, that is which is non-business, second, which is exclusively used for exam, then which is blocked under 17.5, and then which is exclusively for taxable. When you remove all this from T, what is left is your common credit. So let us one by one identify each of these items. So firstly, let me identify ITC for personal use, or you can call it as non-business. Now, out of this, what is my ITC for personal use or non-business is rent. Now, in this rent, 1/3 of the space is which is for personal use. So, out of 99,000, 1/3 is for personal. Anything else is personal. Yes. So these two things are personal. So 5,000. So the total ITC, which is personal, is 33 plus 5 is 38. Then I will identify ITC, which is exclusively for exempt outward supply. Out of the total ITC, some ITC I have spent exclusively for my exempt items. Those ITCs will be removed. If I'm not wrong, something in GTA was there. Yes. So in GTA, this 4,000, correct? Then in GTA, this 1,000 non-taxable items. Anything else? Rent a car. Okay. Then ITC, which is blocked under section 17.5. What ITCs are blocked? Let me just know what I've already considered. Consider this. Excellent. Okay. This is common. GST. Okay. 4,000. Why? Because rent-a-cap is blocked under section 17.5B. Had it been for purpose which is obligated by law, it would have been allowed, but it is specifically mentioned it is not obligated by law, so it is not allowed. And similarly, whatever input tax grade you are using for goods which are distributed as free samples, it is blocked under 17.5H. So both these ITCs are disallowed or blocked ITCs under 17.5H. Now, ITC exclusively for taxable outward supplies. Once I subtract this, what will be left is my common credit. Is there any ITC which is exclusively for taxable? If I remove 1/3 from my rent, no, the balance rent is for entire source, so it is also common. 45 packing is common. So it means there is nothing exclusively for taxable. So whatever is there is nil. For exclusively for taxable, it is nil. So T1, T2, T3, T4. So my common credit will be total of this. Correct? Just let me know, students, how much it is. There is nothing for taxable outward supplies. Am I missing something? This is output, this is output. Sorry, this means supply. This is what I felt. I missed on purchases. So 990 purchases I missed. Sorry. There has to be exclusively taxable. And even I think, if I'm not wrong, there was freight also, which was exclusively for taxable. Okay. Fine. So this happens in exams also. So,
which is 5,000, right? 5,000 has to be taken.
yeah, 990 and 5. You're right. So 995 is exclusively for taxable. Now, after reducing this, what I get is my common credit. How much it is? Can somebody give me this figure? 1157 minus this. So this is 13, this is 38, so 51. So this will be 10 lakhs 46. 1046 will be 111. Correct? 111. 1046 minus this is 111. So it is 1,11,000. Just cross check. I've done this calculation oral. Super. So this is my common credit. Now we find out common credit attributable.
Sir, it's 1,11,000. Is it?
Yeah, I've written 111 only, no?
Acha, because the thing is, the screen is not visible to me, the notings that you're doing. So
Achha,
that's
others
the
also
reason.
cannot see my screen. Is my screen on which I'm writing is not visible?
Visible, sir.
Why Siddharth is also saying no? I'm writing on the screen, which is a notepad.
Sir, you are
Acha,
writing on the
the
question
exclusive
paper.
notepad.
Oh, I don't know what has happened. Wait, there is some problem in screen sharing.
Acha, if at all you're using the notepad, it's not visible.
Is it visible now?
Not yet. Now it is. Now it is.
Oh, great.
Yes,
Thank
now
you.
it is. One note is visible.
Great. Wow. So till now, you all were not able to see anything. Okay. So now I have to find out of my total common credit, I have to find out how much of my common credit is attributable to exempt outward supplies. So for this, we have a formula given. The formula says, if I take the common credit that we have just identified, multiplied by the exempt turnover, divided by the total turnover. So this is the formula given. So common credit, I have computed 1,11,000 into how much is my exempt supply? I think we computed exempt supply. It was 15, na? That was my first question to you all. Students,
Sir,
how much
15.
is
15 lakh.
And I think taxable was taxable supply was 42. So 42 plus 15 plus 5, correct? Just check if I'm missing out on anything. 42 plus 15 plus 8. Correct. 42 and 8 is 50. 15 is 65. correct? So my total turnover is 65 lakhs. Am I correct? So how much proportion amount you are getting, students? Please help me. I have to use one hand to operate the calci, which is making it difficult. So I am relying on your help. So this is the amount.
25615.
So common credit attributable to taxable outward supplies. So it is this minus this. Tell me how much it is.
85,385.
85
385.
385, correct?
Yeah, yes, sir.
You said 385 na beta?
Yeah, yes, sir.
Perfect. Now, how much is my total credit eligible plus ITC exclusively for taxable outward supply? This is anyways available. So 995. So the total of this is my total ITC available. So this plus this will be the final ITC, which I will be enjoying in this month. How much it comes to?
10,80,385.
10,80,385.
385.
Correct?
Correct, sir.
And then I think they have asked me to find out GST payable, which will be my output tax liability minus my ITC available. Now, output tax liability, I have 42 lakhs and I have this 8 lakhs, correct? These are my two taxable outward supplies. So 42 plus 8 is 50. So 50 lakhs, am I correct? Into 18, na? So how much it will come? 9 lakhs. I should also add to this RCM liability. What are my RCM items, students? I think there were 3 RCM
Sir,
items.
GTA 10,000. 5 plus 4 plus 1.
EST, GTA 10. So this is my total liability, 9 lakhs 10,000, out of which for 10,000, anyways, I cannot use ITC, minus my ITC available. Now my ITC available is 10 lakhs. But how much I can adjust will only be 9 lakhs. So my ITC is 10, 80, 385. But what I can adjust is only 9 lakhs because out of my total liability, this is RCM for which I have to pay tax under means whatever RCM tax is there, I have to pay using cash ledger only. So this 10,000 is payable by cash ledger only. Now, what is my ITC ledger? So total ITC available 1083.85 plus ITC on RCM. This also credit I will get minus ITC utilized, which is how much? 9 lakhs. So my ITC balance carried forward will be 190,385. Is this correct, students? Yes. Has everybody understood this whole working? And you also got the feel of how your exams questions are. So in one question, we have to do so many things. Correct? Understood by all? Anybody, any questions or doubts in this? Should I proceed? Okay. So, okay. Chalo, let us come to this question. Now, what it says, question 7. Musicera Private Limited, owned by Nitish Dani, a famous classical singer, wishes to organize a Nitish Dani music concert in Gurugram, Haryana. Okay. Musicera Private Limited is registered in Punjab. Now, it enters into a contract with event management company Supriya Private Limited registered in Delhi. Okay. So be very clear with each of the points. So if I have to just mark it for my reference, so this is your event organizer. This is your event management company. Okay. And this is your singer. So it is the professional who has been hired for performing that particular show. Okay. Now, at an agreed consideration of 10 lakhs. Fine. So my price event organizing service is 10 lakhs. Supriya Limited books the launch of hotel in Haryana for holding the concert for a lump sum price of 4 lakhs. Music Sarah fixes the entry fee at rupees 5,000. 400 tickets are sold. Wow. So you are required to determine the gross GST liability in respect of the supplies involved in the given scenario. Will your answer be different if the price per ticket is fixed at 450? Okay. Rate of GST is 9% each if it is C, S, and if it is IGST, it is 18. Good. So now in this question, students, what are the points that we need to focus on? The point that we need to focus on is they want GST liability to be computed for all supplies. So first is the supply of Nitish Dani. This person is the professional or is the singer. The second liability is of Music Sera Private Limited, who is the organizer of this event. And the third liability is of Supriya Private Limited, who is the event management company or firm. Correct? Now, we have to see what are the sale considerations, if I have to say, of each of these entities and what is exemption, if any, to any of these entities. Correct? Further, are they asking you? Yes, we have to also find out the nature of tax. So for this, we have to also identify the place of supply. So let us go one by one. If I have to start with Mr. Dani, who is the musician. So for the purpose of Mr. Dani, what is the value of supply? Music Dani. How much is this value of supply for No, I think Dani's sale value is not given. Okay. So for the time being, we ignore this. Now the organizer. Now what is the sale value or the consideration for the organizer? Now what organizer is getting is the organizer will be getting the entry fees. So the supply for the organizer is the entry fee. And what is the place of supply? So if you remember, the place of supply provisions for the purpose of entry. If anybody remembers, what is the place of supply for entry? Yes, students. What is the place of supply? Perfect, Siddharth. So the place of supply will be the location where the event is held. Yes, Akshay, you're right. Nitish Dani's role is immaterial because when we talk about the organizer service, which is the sale of tickets, in sale of tickets, Nitish Dani's role is immaterial. Correct? Done. Right? So, place of supply for this transaction is place where the event is held. And the event will be held in Gurugram, Haryana, in this hotel. Correct? So the place of supply is the location of the event, which is Gurugram, Haryana. Now, where is the supplier from? Supplier, that is the company. The company is registered in Punjab. Correct? Punjab, Ludhiana. So what is the nature of supply, whether it is CGST, SGST, that is intrastate, or is it IGST, that is interstate? So what is the nature of supply?
IGST. Sir, it's
Okay.
IGST.
So the tax applicable is IGST. Now, what is the value? 5,000 into 400. 5 4s are 20. So it comes to how much?
20 lakh.
20 lakh. Rate is 18%. So the IGST on this transaction, 18 to 36, is 3,60,000. Right? Now we go to the next supplier, who is the event management company. Now for event management service, what is the place of supply? Students, for event management service, what is the place of supply?
Gurugram.
For this, section 12.7 says you have to see whether your recipient is a registered person or an unregistered person. If your recipient is a registered person, place of supply is the place of recipient. But if your recipient is an unregistered person, place of supply will be, I'm talking
location where the service is provided.
about no. If your recipient is unregistered, then place of supply is Siddharth. The answer that you gave me is as per the general rule, but general rule is not applicable. Yes, it is the location of the event. Siddharth, you're right. So the place of supply in case of event management service depends upon whether the recipient is registered or unregistered. Recipient unregistered, it is location of recipient. Recipient is registered. If recipient is unregistered, the place of supply shall be the location of event. Now, in our case, who is the recipient of this service? Supriya Private Limited's event management service. Who is the recipient? Yes, it is the Music Sera Private Limited that is the organizer of the event. And Music Sera Private Limited is a registered person in Punjab, Ludhiana. So place of supply is Ludhiana, Punjab. Supriya is registered in Delhi. So the nature of supply is interstate. And what Supriya will be levying is IGST. How much?
18%.
10 lakhs, na? So the IGST amount is 180. So we have determined the gross liability. One more question left. Will your answer be different if the price per ticket is rupees 450 instead of 500? What difference it makes? 450 and 500, what difference it will make?
Is below the limit of 500, so exemption.
Exemption? Good. So in the exemption entry, for entry to such events, there is a limit, as rightly pointed out, of rupees 500. If the value is below 500, it is exempt, but if it is 500 or more, it is taxable. So in our first case, where the value was 500, it was taxable. But in this revised question, we will say that since the value of ticket is below 500, then the supply of this service of entry to this music event will be exempt under the GST law. So there will be no GST liability. Fine. Great.
Sir,
Tell me, beta.
the exemption is because of the it is classical music, right, sir? If it was if it was not classical music, then the 450 is irrelevant, right?
Do you have the entry in front of you? I'll have to open the exemption chapter. Do you have the entry in front of you? The exemption chapter itself. So that will get upfront answer. Oh. P. Admission to Museum National Park. No, not this one. See, service by way of right to admission to circus dance, theatrical performance, including drama, ballet, award function, concert, pageant, musical performance. See, is there the word cultural used over here, beta?
No, sir.
No. So then your question, if let us say it would have been some Western music performance, or for that matter, any musical performance, would this exemption still continue?
Yes, sir.
100% yes. So that is why I said, whenever you have this slightest of doubt, it is better to go back to the law. In fact, now whoever is present over here will never forget this point, right? But then this point is again interest to me. I will not only limit my understanding or my revision to this point. Now, since you have raised this point of cultural, it means somewhere we would have read cultural somewhere, right? So now my question is, so we have got answer to this first point, that for the purpose of this entry exemption, it may be any type of event, it may be any type of musical performance, right? Now the question is, where is that
But
cultural
sir,
point
on
coming
a
from?
on a standalone basis, if you look at it, the performance which includes Western kind of art form, that should be made taxable, right? I mean,
Why? Why it should be made
Just my
taxable?
viewpoint.
So there should be some reason for your viewpoint.
But because we are more into, encouraging such other forms of, the Indian rooted based um, uh, fine arts. We are more into encouraging that. So this should not be, um, higher weightage should be given to that.
Agreed.
And
But presently it is not. Na?
so that's
For
what
this
I
entry, it is
find
not.
should be.
No problem. So whenever you become the finance minister, we'll do it that way. We'll amend the law, right? Fine. But now coming to the point, see, this is how I revise.
So,
So
as a general, in a general parlance, you will take it into this bracket. Uh, if you go by this exemption entry, the Western form will also be covered here.
yeah, everything will be covered now because see, there is no
Everything will
criteria
be
over
covered.
here.
Okay,
It is simply
fine.
saying musical performance. Correct. In
Okay.
fact, see, they are even covering concerts and pageants, like all the beauty pageants and all are also covered. Even they are
Yes,
also covered
yes.
now. See, all the award functions we nowadays watch, all these IFA awards and so on, everything is covered. So that is why, see, what they have done is smartly, they've said that we'll give you exemption if the value of your entry does not process 500. So that way, they've ensured that they are even giving benefit to all types of these functions. And at the same time, they are not giving benefit because 500 is a very meager amount. Today, I don't think any of these award functions and all will have an entry fee of less than 500. Correct? Anyways, my point is what? See how I revise. Now, when I am reading this, even to me, maybe this cultural or classical, this point will come to my mind. But when I read this entry, so my first approach is if I have doubt about any entry, I will not ponder. I will directly go and read the law again because that will crystallize the point in my mind forever. Now, for this entry, I will never make a mistake, right? But at the same time, my mind is still scratching because there is something relating to cultural, there is something relating to classical, because that doubt had come to me. So now the question is, what is that classical or cultural which is exempt? The doubt which came to Akshay's mind is now in my mind also. So best is, see, this is how you should revise. When you're revising one thing, if something else is also there, so don't limit yourself to this entry. You got to answer for this question, but let us go and find out if there is
Interlinkage.
any other exemption relating to events where culture is there. So I'm not finding out any except this one. So it is part of the same thing. The requirement is that it should be organized by this. Okay.
Yes, sir. I think I got mixed up with entry 78.
That is okay. But that is not a problem. See, in
Okay.
fact, that is how you'll revise other things also, na? It is
Sorry,
okay.
sir.
Getting mixed up is fine because this will help me revise further things. So see, here there is something which I have found. Training coaching. So where this culture is used, training coaching in recreational activities relating to arts culture. So what is exempt over here? If I am taking coaching classes of teaching you tabla or any dance form, in that it should be a cultural dance form. So it is a recreational activity, but it should be here culture driven. If here I am teaching something which is Western, then the training coaching fees will be taxable, right? So see, there is, I should, culture will also give me agriculture. It will be too much. So let me use culture. So it will limit, still agriculture will be covered. Okay, anyways. Right? So this way I can go and explore to find out where all culture is covered. So service by way of training coaching, this is what we just discussed, right? Training coaching that will require that it should be in any of the forms, art forms, where culture is the condition. Now, I also remember that there is one more requirement or condition where it is classical. So let us go and check that also. Something similar. So like cultural, we have also an entry where, yes, Siddharth had already
Consideration
identified.
of 1.5 comes.
So this Siddharth had identified long back. So one more entry on similar lines is the services by an artist. Now in this example, they had not given the fees of artist, but had they given the fees of artist, then this entry would have come into picture. And then, in fact, we would have also checked whether the performance which the artist is giving is relating to your art form, culture form. If that would have been related to culture form or art form, falling in one of these art forms like classical or folk, it would have been eligible for exemption subject to the amount of 150 or less. And if here the performance is for Western, which is not a classical art form, then irrespective of the amount, it would have been taxable. So total, we have found different areas. One is coaching service and recreational forms where the word culture is used. Second, performance by artist, where the word classical or folk performance is used. So see, this is how you will be able to connect to these things and it will retain more in your heads. Fine.
Thank you, sir. Thank you very much.
I thank you for what, beta. So let us proceed. Now, after two small questions, one big question again. So we started with a big question, we went to two small questions. Let us come back to a big question. So Mrs. Kajal, a registered supplier from Jaipur, has made following supplies in the month of January. Supply of laptop along with laptop bag to customer of Mumbai, rupees 55,000 before GST, 10,000 kits at 50 each amounting to 5 lakhs, correct, before GST to Ram Fancy stores in Kota, Rajasthan. Each kit consists of one hair oil. Acha, that is why they have called it as kit. That is what I was imagining. First it was laptop, suddenly what is kit? Okay, so it is kit means here 2-3 items are combined. Oh, so now I'm getting the feel. What this question will be revolving around, I'm sure you will be getting the feel. See, from the above information, examine each of the above supplies made by Mrs. Kajal for the month and determine the rate. Oh, ho, ho, ho. So it is a question of determining the rate. Fine. So first is laptop with laptop bag. Second is a kit. And we don't have to do anything else. We have to simply find out the rate. We have to help them identify the rate. Okay. 100 kits are given as free gift to Jaipur customers, all unrelated on the occasion of Kajal's birthday. Each kit consists of one hair oil, beauty soap. Okay. Cost of each kit is 35. Input credit has not been taken on the goods contained. Next, event management services provided free of cost to her brother, wholly dependent on her for his son's marriage function in Indore. Oh. Cost of providing the service is 80,000. Fine. But anyways, I think here valuation is not the question. Now we are only required to, so no tax liability is required. So we'll not get into valuation. We'll only go to the rates because they are very specifically asking the rate. They are not asking you to find out the value or find out the final GST amount. So wherever there is valuation involved, we will skip because that is not required in this question. 1,400 chairs, 100 coolers hired out to a function for 330 before GST, including cost of transporting the chairs and coolers from Mrs. Kajal's godown at Jaipur to the function area. Kajal is not a GTA. Transport service provider provided by her are exempt. Oh. Since Mrs. Kajal is not a GTA, transport services provided by her are exempt. Wow, great. So what they have given us is, they have given us multiple rates for laptop 18, laptop bag 28, hair oil, beauty soap, hair comb, event management, service of renting chair, transport service. From the above information, examine each of the above supplies made by Kajal for the month and determine only the rate So neither value nor the final GST amount. So none of this is required, only rate is required. So let us start. So Mrs. Kajal, a registered supplier from Jaipur, has made following supplies. First is laptop and bag for a single price. Okay. Now my first question, students, that we know the independent rate of laptop and laptop bag. So the question is here whether we should split the supply between laptop and laptop bag and take the independent rates, or we should take this concept, this example to the concept of composite supply, mixed supply, and take the single rate. What will be your take on this? Yes, students, whether we should split this value and then take independent rates of laptop and laptop bag, or for the whole value, we will take one single rate. Because the moment I have to take one single rate, I have to get into the concept of composite supply and mixed supply. So what do you think is more appropriate here? Anybody?
So it's a composite supply.
See, splitting of value is not possible in GST until and unless there is a specific rule which gives you any percentage of splitting. Like if I have to tell you, in case of sale of flat, we have valuation rule which says assume 1/3 towards land. Similarly, in case of a works contract service where you are installing any type of this solar plant and all, they have given you a breakup of 70/30. So we have such specific rules where breakup is given. Other than that, if a single price is charged for multiple items, like in our case, laptop and laptop bag, we cannot break it in GST. We will have to consider it as one supply. Now, when we consider it as one supply made up of two or more items, then in GST comes the concept of mixed supply versus composite supply. Now, what is the difference, students? Let us revise that concept also here. So mixed supply and composite supply, the difference is where the multiple items which you are giving together as one package, like here two things are given as one package, in the next example three things are given, whether they are packaged in such a manner that they are naturally bundled, means what? Whether giving those things together is a common practice in that industry, whether it is a trend in that industry to give that things together. First condition. Second condition, can we say that out of those multiple things given together, one is the principal supply main and the other items which are given are subordinate? If both these conditions are satisfied, first it is naturally bundled. Naturally bundled, I explain in simple words, means that it is a trend in that industry to give it together. It is a common practice in that industry. That is what is the meaning of naturally bundled. That is, those items are interconnected, they are given together, and it is a common practice, common trend. Then first condition of naturally bundled is satisfied. Another condition is that out of the multiple items, only one item should be the main item and other should be supportive items. If both these conditions are satisfied, then that package, combo item, will be called as a composite supply. If any one of these conditions is not satisfied, that package, that combo item will not be called as composite, it will be called as mixed supply. I hope this is clear. Now, with this in mind, you have to tell me this first item, whether it satisfies the condition of composite supply. If yes, we will have to then find out which one is the principal supply and take the rate of that. If it is not satisfying the condition, then it will become mixed supply. Then out of both, we'll have to take the highest of the rates.
Principal supply is the supply of laptop, both of which are combined together. Matlab the laptop bag is also supplied with the principal supply for a single price of 55,000.
See, so whether our both the conditions of composite supply are satisfied, that first it is naturally bundled and second one of them is principal.
Yes, sir. Both the conditions are satisfied. It is a common practice as well as they are naturally
So giving
bundled as
laptop and
one.
laptop bag is naturally bundled, right?
Yes.
Okay, and out of this one is principal, which is laptop. Correct. So if that is the case, we will go by the rate of principal supply, which is laptop, which is 18%. Correct?
18%.
So for this, our answer is 18. Nothing else is required, no valuation required, no computing GST liability required. So don't waste your time in calculating. Going on to the second thing, you have given 10,000 kits. The kits comprise of 3 items. One is a hair oil, one is a soap, and one is hair comb. Now, giving these 3 items, is it naturally bundled? First question. Second, is any one of them a principal item and the other a supportive item? If both these conditions are satisfied, it will be composite. If any one is not satisfied, it will be mixed. Yes.
Second one is the mixed item. Mixed
Why?
supply.
Which condition is not satisfied?
One not naturally bundled as well as
Sorry, I could
one.
not hear.
So second condition is not satisfied.
Because none of this is, all are equally important. All are principal,
Yes.
right?
Yes. Yes.
We cannot say one is principal and the others are subordinate. So exactly
Yes,
right.
sir.
So since here there is no one item which is principal, hence we cannot say that this second supply is a composite supply. So it becomes mixed. If it is mixed, we will see out of the 3 items,
The highest rate of
hair oil,
tax will be
beauty
taken.
soap, hair comb, which is the highest rate item, beauty soap. So for the entire supply, we will take a single rate of 28%.
28%.
Right? Great. Now in third kit, they have kept hair oil and beauty soap. Right? But the problem is that the kit is given free. Now if it is given free, that is without consideration, then we have to check whether it fits in schedule 1. Because if it fits in schedule 1, then it will be a supply.
So, the conditions are first one is given to the related party, and for condition second condition is for not receiving any consideration. Third is the
See, schedule
furtherance
1,
of business.
there are different entries. Now for us, in this case, 2 entries could have been relevant. First is schedule 1 entry 1, where things are given away permanently, on which ITC has been taken. Still, it would have been a schedule 1 transaction. Or 2, the second entry of schedule 1, where you are giving anything to your related parties or your distinct persons. Now in this particular case, our supply is made to unrelated party first. Second, input credit has not been taken. So neither entry 1 nor entry 2 of schedule 1 is triggering. Remaining entries are not applicable over here. So this transaction is a no supply.
No supply.
So there is no question of finding out the rate. Moving ahead, her 4th transaction, event management service, which is provided free of cost to her brother. We all know brother is
Sir,
covered in the definition
can
of
you repeat as to the previous transaction as to why we are considering it as no supply, the reasoning to it? I mean,
yes. You have to give the reasoning. As I said, see, free supplies can be.
But I would want to understand once again because I'm still not convinced. So,
Okay, so see, I'll repeat. Anything to be supply has to satisfy the limbs of section 7. One of the limb is consideration. If there is no consideration,
it is not satisfied.
Supply. Correct. But then exception to this is schedule 1, where few transactions even made without consideration will be considered as a supply. Now we have to see whether our case fits in schedule 1, correct?
Yes.
Now
So
for
this is
this,
unrelated.
so you have to see different entries of schedule 1. Now for our case, 2 entries are relevant. Entry 1 also and entry 2 also. Entry 1 is where
Okay.
goods or assets of the business are permanently disposed of, but the condition is ITC should have been taken. So here we are giving away our assets of the business, which is stock, which is also assets of business, but we have not taken any ITC on that. So entry 1 is not getting triggered. Second possible entry
Okay.
is where entry 2 says any supplies which are made either to related parties or to your distinct persons. Now here it is clearly mentioned that the person to whom I have given this gift are all unrelated persons. Now, if they
All
are all
unrelated.
unrelated
Okay.
persons, even entry 2 of schedule 1 is not triggering. Entry 3, entry 4 of schedule 1 is anyways not applicable over here because entry 3 is dealing with import of service, entry 4 is dealing with principal and agent. Those are anyways not triggering over here because that is not the scenario. So none of the schedule 1 entries are applicable over here. So this cannot become supply under GST. Are you
Okay.
convinced?
Fine. Understood. Thank you so much. Yes, yes.
Great. Now moving on to fourth case scenario where it is event management service again provided free, but now it is provided to brother who is wholly dependent. Now this fits in the definition of related person. So now schedule 1 entry 2 gets triggered. Now once it is triggered, tax is applicable. We are not going to get into valuation, but still if somebody wants to just for the purpose of knowledge know what could be the valuation over here, it would be 110% of 80,000 because no other data of open market value or price by charge by others is applicable. So if those other values are not given, then the last option available to us is taking 110% of cost. But here the question is not on valuation, so we'll not get into valuation, but we just discuss that for the purpose of our knowledge extension. Now we are only required to find out the rate. The rate is clear cut 5%. So there is no doubt that this service would be taxed at the rate of 5%. Correct? Then comes the next transaction where 1400 chairs, 1100 coolers, they are given on hire. So it is a renting of asset service. Correct? Here there is price charge, so there is no challenge of whether it is supply or not because it is not a free supply. Now the only question to be addressed over here is this amount which I am charging is including transportation. But now it is said that since Kajal is not a GTA, and we all know that there is an exemption entry for transport service, which says that where transportation is done by person other than GTA, it is exempt. So they are trying to give you an angle in this example that there are two services. One is the renting of all these assets, that is chairs, tables, coolers, etc., plus the transport of goods service. So two services are again combined. Again, we have to check whether it is composite supply, mixed supply. We have to check that. And then depending upon that, we'll have to find out the rate. So again, two services are given together. One is the renting of asset service. Second is the transport of goods service. Both are given together. So again, answering the first question, we have to find out whether this is composite supply or mixed supply. Yes, students, whether this will be composite supply or mixed supply.
Supply.
Sorry, beta.
So composite supply.
I could not hear.
Composite supply, sir.
Composite supply, not mixed. Not mixed.
No.
Okay. Now, it will be composite supply. Again, how to determine? I gave you two tests. Both conditions have to be satisfied. First condition, whether it is naturally bundled, that is giving this together is essential, is a normal practice. And two, can we say one of them is principal and the other is supportive? Now, both these conditions are satisfied because whenever this type of service is given where you are giving certain things on rent. Many times you have to also deliver it to that particular client's place. So transportation is given along with renting service. So it is naturally bundled. Second, is there one of the supplies which is principal? The answer is yes. Obviously, renting is principal, transport is subsidiary. So both the tests are satisfied. So this transaction is a composite supply. Now, if it is a composite supply, even though one of these services is exempt, but what is exempt is your subsidiary service. The principal supply is not exempt. So in this case, the entire transaction would be taxed at the rate of principal supply. So even though one of the services is exempt, but the whole transaction would be taxed at 12%, treating it as composite supply. I hope this question is clear to all. Anybody having any questions or doubts, students? No? So we'll take this figure some again. Okay. So coming to question 9, Chanakya Academy is registered under GST in Uttar Pradesh. It runs the following educational institutions. Okay, so they are using the word educational institution. Now what we are supposed to do, let me read the question so we will be clear. With the help of above details, determine the amount of GST. Okay. So I have to find out the amount of GST. So rate will be required, value will be required. And anyways, exemption I have to check. Ignoring ITC on goods service received during April to September by various education institutions run by Chanakya. All the amounts given above are exclusive. With the help of above details, determine the amount of GST payable, if any, on goods and services received. Okay. ठीक है. Now, Chanakya Academy, let us say it is an educational hub. Within that, different education institutions are run. Now, since this question is exclusively limiting to education institution exemption entry, try to recall the important aspects. First, we have to test whether the particular entity fits in the definition of education institution. If it fits, then only the exemption will apply. Now, if it fits in educational institution device, there are some restrictive conditions. Only the limited inward supplies will be exempt. And that also, depending upon which type of educational entity you are, depending on that, different inward supplies will also be exempt. So let us analyze this. First entity which is covered in Chanakya Academy Group A is Keshav Institute of Technology. It is a private engineering college. KIT also runs distance learning post-graduation engineering programs. Exams of such programs are conducted in select cities at center appointed. All the engineering courses, including the distance learning post-graduation programs, are recognized by law. Superb. So the entity is an education institution because firstly, it is running courses and these courses are recognized by law in force in India. So if you remember the definition of education institution, first from preschool up to 12th standard, that is higher secondary, all are covered. And then beyond higher secondary, the requirement is who is covered. This particular person is covered who is providing courses or who is providing degree which are recognized by law. So firstly, we have to identify whether this particular entity is education institution. If it is education institution, then only we can proceed to find out whether the exemption is applicable or not. So firstly, is KIT education institution? Answer is yes. Second, Little Millennium, a preschool, is it education institution? Yes. Third, Bright Minds. I hope preschool, you all are clear. Huh? Preschool is also education institution, right? Then Bright Minds, a coaching institute in Kanpur. Interesting. The institute provides coaching for Institute of Banking personnel selection. Whether Bright Minds is education institution?
No.
Very good. Then the last one is Spring Model, a higher secondary school affiliated to CBSE board.
Yes, education.
Yes, beta, tell me.
Yes, educational.
Good. So, out of 4, 3 are. Now, in this, 2 and 4 are falling in the same category of education institution from pre-school up to higher secondary. And this one is the second. The academy provides the following details relating to expenses incurred by these institutions, and we have to find out the GST applicability. These will have the same exemption because they are both the same category of education institution from preschool to higher secondary. And this is above higher secondary, which is providing some graduation, post-graduation degrees, which are. Am I clear? Students.
Yes, sir.
Firstly, is this clear that out of 4, these 3 are?
Yes, sir.
No doubt about this, that these 3 are educational institution. Super. So now going on to the services. Printing services for printing the question paper and contents are provided by the institution. So it is a printing service of question papers. Whether this is an exempt service. There was something relating to conduct of exams. Whether services relating to conduct of exams is exempt. Let us do one thing. Let me open the exemption itself. It will be more easy. See, so this is the exemption entry. Now we are not concerned with the outward, we are concerned with the inward. This is the list of services which are eligible for inward. But just before we go to that, let us go step by step. Education institution means an institution providing services by way of preschool education and education up to higher secondary school. So our other 2 are fitting in this. Education as a part of curriculum for obtaining a qualification recognized by law. First one is fitting in this. Third one is education as a part. This is not covered. So out of 4, 3 are fitting in the definition of education institution. Now, for the inward service, I think we have a good table. What will be covered in the inward? Input service, yes. Now see, in this table, you will get it very easily, you'll understand. So, which education institution? Preschool up to higher secondary. Then second is education institution providing education as a part of curriculum. And third one is the vocational. Now, first input service, which is eligible for exemption, is transportation of students, catering, security, services relating to admission or conduct of exam. Here, service relating to admission or conduct of exams and supply of online journals or periodicals. So these are the inward services which are exempt. Now, coming to our first case. Printing service for printing the question papers and contents are provided by the education institution. This is relating to conduct of exams. Now, these 3 people have availed. whether it is exempt or whether it is taxable. Now I have given you the entry also. Akshay beta, how outward these education institutions are receiving these services? So it is inward service for these education institution. You have to determine whether on inward the supplier is liable to pay tax or not. Correct? Now, tell me, who will give me answer for this? Sorry, one by one you can answer. Please.
Hello, sir. I'm Siddharth. Yes, sir. Is my
Students,
message is
you
visible to you?
may answer, please. Yes.
Sir, my message is visible to you. Are my messages visible to you, sir?
Your messages are receivable. Have you put something now? Tell me, but now, right now, you have not answered anything, na? Siddharth. Geeta, you want to answer?
Okay, for kit it is taxable, and bright minds and spring model it is exempt.
For whom, beta? For KIT, is it exempt?
Yeah.
Then second is bright minds.
And spring model, that school
For
is
all three, it is exempt, right?
For kit it is taxable. No?
Why? Why for kids it is taxable?
Sir, it is not a.
Sorry?
It's not a preschool or school. It's a university. No?
It is education. Coaching classes. 1 second, I've made a wrong this. So for us, this is a pre-primary and this is a school. So both these are schools. This Bright Minds is a coaching class, correct? Yes. So this one is not eligible. So is this exempt? Yes. Here is it exempt? Yes. Correct. The next service is paper procured. So you are purchasing paper for printing the question paper.
For all taxable.
Why? Is it not in relation to conduct of exams? See, let me open that exemption.
But it is goods, no sir. It's not services.
It's good. Acha. So we are talking about services relating to admission or conduct of exams. This one, service relating to admission or conduct of exams. So it is also for printing the question papers. So will it not be exempt? Rightly answered. It is not exempt because this is not an inward service. It is purchase of goods. So this is taxable. Next, honorarium paid to paper setter and examiners who are not on your roll. Again, whether it is relating to conduct of exams, yes. Is it service? Yes. Exempt. Then rent for exam hall. Again, whether this is in relation to conduct of exams, yes. So whether exemption will apply?
Sir, you are not audible.
Why? I am not audible, students?
No sir, you are audible.
Okay. Fine. So eligible for exemption here. But
so
here
please explain point 3 again because you are not audible at that time.
But the answer is when you are paying honorarium to paper setters, right? But am I audible?
Yes, sir.
So when you are making payment to paper setters and examiners, is it a service in relation to conduct of exams? Answer is yes. So since it is in relation to conduct of exams, you are eligible for exemption. Correct?
Okay.
Similarly, rent for the exam center, it is again in relation to conduct of exams. Exemption is applicable, but not here. So this is taxable. Why? Because this person is not education institution. Now, Now coming to the next service, which is subscription for online education journal. Now this service is exempt, but it is exempt for whom? So supply of online education journal is covered here, right? So it is a service which is exempt to whom? It is
College and university.
a service exempt to, yes, colleges and universities, but it is not exempt to schools and preschools. So in our example, this particular service of online education journal provision service will be exempt only where the person is a college, which is the first case. The other cases, it will be taxable. Is this clear to all? Now the service where buses are given on hire and the buses are given for transport of the students' faculties. Now in this case again, for this, the transport of students
Only for
service
preschool.
or the service only
Schools.
for preschools and schools up to
Recording in progress.
something is given. Security and housekeeping service for spring model includes 80,000 payable for security and housekeeping at student event organized in a banquet hall outside the campus. Oh, education institution. Okay. So here, if it is performed outside, so in case of spring model, 80,000 is outside. So out of this 465, taxable portion will be 80,000 because that much is for outside. Correct? Is this clear to everyone, students?
Yes, sir.
Great. So this is how this particular question will be answered. Now, once we have identified what are taxable, there is no question or challenge relating to valuation. Value is given. So we'll simply multiply it by 18% to find out the tax liability. Is this clear?
Yes, sir.
Fine. Great. I'll just take a 10 minutes break and then we'll rejoin and go ahead with other questions. Akshay is having a question. Is air ambulance service exempt? Good question. Now, Akshay, see, air ambulance service means what? When a patient has to be transported from one place to another by air, it is generally called as an air ambulance service. Correct? You're talking about the same service, Akshay? Akshay. Now, if you want to exempt it, under which category you want to fit it? You want to fit it under hospitality? So let us read the hospitality entry. Not hospitality, sorry. Healthcare. So let us read the healthcare entry to find out, can air ambulance be fitted over there, right? See, now first part, it is the healthcare service by clinical establishment, etc., etc. It will definitely not fit over here. Where it can fit is this, check. But then again, minute reading. You have to check whether all aspects of this entry are covered. But it says services provided by way of transportation of a patient. Till this point, it is covered. And then it says in an ambulance other than which is covered in A. Now the question is, when they are saying ambulance and when you are saying air ambulance, whether it means one and the same. So for this, just check if they have defined air ambulance or whether they have defined ambulance here. As far as my memory goes, they have not defined ambulance, but still, just to double check, we will check over here if they have defined ambulance. Yeah, now see what is given. Ambulance service provided, National Health Mission. Of state governments, by clinical establishment. No. So they have not defined what is ambulance, neither they have defined what is air ambulance. So the question is whether transferring a patient by air ambulance would be exempt. See, my understanding is no. I believe it will not be exempt for the reason that air ambulance is not a special ambulance. It is a normal aircraft. It is a normal aircraft where that special facility is created so that a patient can be transported. Siddharth is saying it would be exempted. Siddharth, if you are saying it is exempted, can you give me any reasoning? Because here when I see ambulance, what I understand is ambulance is only the regular ambulance which is specially designed to carry patients. Air ambulance, there is no special aircraft designed to carry. It is a regular aircraft, only a special facility is created to carry the patient. This is what I understand about air ambulance. So my understanding is that air ambulance should not be covered in exemption. Neither I found anything over here. But still, if anybody has specific inputs on this, like you are saying it is exempt, then give me some specific. No, that's why I'm saying, Siddharth, you are saying it is falling in the ambit of ambulance service. But understand this, but see, when you, chalo, let us check if there is any definition of ambulance. Where can we check? Because I never checked that. Let me check if Google can give me definition of ambulance. Ambulance. Ambulance definition. See, what it says, an ambulance is a specially equipped motor vehicle, aircraft, or ship used for transporting patients, especially those with serious injuries, illness, to a hospital or other medical facility. Ambulances are typically staffed by trained medical personnel like emergency medical technicians, etc., etc. So, if it is a specially designed vehicle aircraft, it is exempt because it will come in the definition of air ambulance. Now, in our question, when you have asked whether air ambulance is exempt, this is what I also reverted back, or I asked you back, that whether the patient is being carried in an aircraft with some special facility, or it is a specially designed aircraft. If it is a specially designed aircraft, then only it will fit in the definition of ambulance. Otherwise, I believe it should not be fitting in the definition. So we have seen the definition. So if you remember the question, can you give me more details from the question, if any, so that we can answer? Otherwise, your answer should be conditional, saying that if it is a specially designed aircraft in a fashion to carry only patients, then it will be eligible for exemption. Otherwise, if in normal aircraft, a patient is being carried by making special provision for that particular patient, then that will not be covered in exemption, because then that aircraft does not becomes ambulance, correct? So you are saying I say give it as MCQ question. So still there would be answer, na? If it is given as a question, there would be answer, na? Don't worry, you'll get the answer very soon. If it is a exam question, still you'll get the answer. Okay. Chalo. Let us take this question now. Mr. Surana has a proprietorship firm in the name of Surana & Sons in Jaipur. The firm is registered under GST in the state of Rajasthan, manufactures three items, three taxable products, M and O. Tax on N is payable under reverse charge. Okay, so all three are taxable, but out of this, the tax on N is payable under reverse charge. Okay, let me see what is the question. With the help of above mentioned information, compute the net GST liability of Surana & Sons payable from the electronic credit ledger or the cash ledger. Okay, assume that the rate of GST on goods and services are 12%, 18% respectively. Okay, so for goods it is 12, for services it is 18. Subject to the information given above, assume that all the other conditions necessary for availing ITC have been fulfilled. Turnover of Surana is 85 lakhs in the preceding financial year. Great. Now, if the turnover of Surana is 85 lakhs, okay, we have to also check, but it would have been given had it be registered as a composition dealer. So I believe he is not registered as a composition dealer. This is what I'm assuming. So fine. Now what we are supposed to do? We are supposed to find out the net GST liability. Okay. Now my first question. If my outward supply of product N is covered under reverse charge, it means I don't have to pay tax, my recipient has to pay tax. So my question is whether this outward supply made by me will fall in taxable supply or will be considered as an exempt supply for the purpose of calculation. Okay, Siddharth has given me one answer. Fine. Others?
It's taxable.
Okay, it is taxable. Fine. Anybody else? Okay. Yes. Anybody else? See, interestingly, N is a taxable item, I agree. But for the purpose of section 17.2, what is 17.2? 17.2 is when some of my supplies are taxable, some of supplies are exempt. That is what is section 17.2. For the purpose of 17.2, section 17.3 says that only for the purpose of 17.2, that is for taxable exempt proportionate reversal, in the exempt supply, we will also include supplies which are taxable under RCM. So the answer is only for the limited purpose. Limited purpose of what? Limited purpose of computing the proportionate reversal, the supplies which are taxable under RCM will have to be considered as exempt supplies. Is this clear? Okay. Now this is a comprehensive sum. You have to do everything. You have to compute output tax, you have to compute input tax, you have to do common reversal and then find out the net tax liability. Fine? Okay. So turnover of M, which is excluding export sales, so it is domestic sales. So one second, which one is goods and which one is service? M and O are goods, so they are liable at 12%. Okay. So this will be liable at 12%, correct? Then N, we are not liable to pay GST. Oh, again 12%, because if I'm not wrong, all goods are liable at 12%. Acha, export of M with payment of IGST not eligible to avail benefit of merchant export. Okay, okay. So since it is with payment, I'm taking 12%. Export of O, which is under letter of undertaking. So there will be no GST because when it is under letter of undertaking,
Sir, video is paused. Sir, no audio, no video.
yes, beta, there was some network issue at my end. I hope my audio is there now. Yes, beta, am I audible
Yes, sir.
now?
Yes, sir. Yes.
I was talking about consultancy services. So my question to you all is, consultancy services I'm providing to unrelated clients outside India, and the consideration is received in convertible foreign exchange. What impact this will have in GST? This will become export of services.
सर इंपोर्ट का तो है बट एक्सपोर्ट का
क्या बेटा इंपोर्ट का है, एक्सपोर्ट का नहीं समझा मुझे आपका पॉइंट।
सर इंपोर्ट के केस में तो ये टैक्सेबल होता, बट ये एक्सपोर्ट है, इट इज।
तो बेटा एक्सपोर्ट को हम जीरो रेटेड बोलते हैं। जीरो रेटेड में आपको दो ऑप्शन दिए जाते हैं, या तो आप विद पेमेंट करो या विदाउट पेमेंट करो। अब इसके लिए नीचे कुछ नहीं दिया है तो हमें अजम्पशन लेना पड़ेगा। ठीक है, इन्होंने तो ऐसा कुछ नहीं दिया है, सो मैं अजम्पशन ले रहा हूं कि ओ की तरह ये भी पहली बात है एक्सपोर्ट ऑफ सर्विस है। आई होप ये सबको समझ में आ गया।
यस सर।
ये भी हमने विदाउट पेमेंट ऑफ जीएसटी ही एक्सपोर्ट किया, दैट इज अंडर लेटर ऑफ अंडरटेकिंग, करेक्ट। नाउ कम सेल ऑफ बिल्डिंग, excluding stamp duty of 2.5 lakhs being 2% of the value. Entire consideration is received post issuance of completion certificate. इससे क्या फर्क पड़ता है? Yes,
So
इससे क्या हो?
this becomes part of exempt turnover. Not this
Firstly,
value, the stamp duty value.
Firstly, this is a Schedule 3 supply. If it is a Schedule 3 supply, it means it is a no supply. However, so firstly, there is no GST. However, again, For the limited purpose of section 17.2, 17.3 says we will include this also in exempt supply. But as you rightly pointed out, they have given the value to be taken. So even this is exempt supply only for the limited purpose of 17.2 reversal. Yes, you are saying something. So what is that value, beta?
Sir, it would be stamp duty value.
No, it cannot be stamp duty value. It is stamp duty value?
No, 1 crore 25
Yes.
lakhs.
Yes.
No,
I'm
2.5 lakh is the stamp duty value.
Yes. So what is the stamp duty value?
125 lakhs, sir.
2.5 lakhs is the stamp duty. So what is the stamp duty value? See,
1
they have
crore
said that.
25 lakhs.
Okay. They have said that 2.5 lakhs is 2% of the value. So 2.5 is 2%. So how much is
Then
100%? That will be the
1
stamp
lakh,
duty value.
1 crore 25 lakh.
Yeah, correct. So stamp duty value is 1.25 crores. ठीक है. Next, interest. This is exempt, correct? Interest is exempt, na? Students.
Exempt, sir.
So, whether for the purpose of common reversal of credit, this will also be included. Yes. Whether for the purpose of common reversal of credit, whether this will be included. Now, interestingly, this is an exempt supply, but this will not be considered as an exempt supply for the purpose of reversal of common ITC. It means it will not be treated as exempt supply when we are computing the reversal of common ITC. So interestingly, what is not exempt supply is treated as exempt supply. What is exempt supply is not treated as exempt supply. That is the beauty. Again, sale of shares is a no supply item. Why? Because it does not satisfy the condition of supply. Which condition of supply is not satisfied? The condition that there should be goods or service. Only then any item can be supplied. Now, since here there is no goods, no service, this transaction cannot be regarded as supply. Now, if it is not supply, again no GST. But again the same question, whether it will be considered as supply for the purpose of 17.2, whether it will be considered as an exempt supply.
So 1% we have to take.
Very good. Again, it is a no supply, but only for the limited purpose of reversal, it will be considered as exempt supply. How much? 1% of this. Correct. So this is how much? 2 crore 50 lakhs. So 1% of this will be how much?
2,50,000.
So again, 2.5 lakhs will be considered. Here 1.25 crores will be considered. Great. Legal services received from an advocate in relation to product M. So this is RCM. We have to pay tax under RCM on this, correct? Common inputs, input services used for supply of goods and services mentioned above. Inputs 35 lakhs, input service 15 lakhs. Excellent. What an example. So inputs is 35 lakhs, 12%, no? This is 18%. How much it comes to? 12% of 35 lakhs. 350 plus 70 is 420.
4,20,000.
And 18% of 150 15 lakhs का 18
2,70,000.
Total 6,90,000.
6.9 lakhs is my common ITC. Wow. So how much is 18% of this? How much is 18% of 350?
63,000.
63,000. Well, let's just find out these amounts. 12% is 25.
1,68,000.
30,000.
Yes, sir.
And how much is 12% of 14 lakhs?
1,68,000.
1,68,000.
Okay. So computation of output tax payable. So it will be MOM. So it will be domestic sales of MO, export sales of M, then consultancy, no, that was 0, taken it up with some. So export of M, and then this RCM also we have to pay, correct? So firstly, my total output tax, which will be total of these three. So 168, 120 is 288, 288 and 30 is how much? So 288, 318. So my output tax is 318. Is it right?
Yes, sir, right.
Great. Then I have some RCM liability also, which was I think 63. Correct. So my RCM liability is 63. Yes. Total payable comes to how much? 381. Am I correct?
Yes, sir.
380.
Okay. Now, common credit. How much is common credit? Yes. So firstly, total common ITC. How much it is? 690, no? Minus
Yes.
common ITC for exempt supply. So 690 is common into what are my exempt supplies? N is exempt 6 lakhs. Then 1 crore 25. And there was one more, no? Yes, this amount, which was I think 2.5 lakhs, correct? Na? So 2.5 lakhs 6 lakhs, so 8.5 lakhs, and 1 crore 25 lakhs. 125 plus 8. Is it 1 crore 31 lakhs 50,000? Total of exempt supply. These three items you have to add up. 1, 2, 3. Just check, students. 8.5. So 25 plus 8.5 is 133.5. Yes. So my exempt supply is 133.5.
Yes, sir.
Yes, sir.
1 crore 33 lakhs 50,000. Now what will be my total supply? Just use calci. Total is 14 plus 6, 20. 20 plus 10, 30, 30, 32.5, 42.5, 42, 62.5. Correct, na? We have reached 62.5 lakhs, right? No need to cross check, na? 20, 30, 40,
Yes, sir, right.
62.5. Then 1.25 crores. Correct? So add how much it is?
1 crore 87 lakh 50,000.
1 crore 87 lakhs 50,000. Okay. Then what else is there? 4 lakhs interest. Then this 1%, 2.5 lakhs. Correct? That's it. So add up 62.5, 1 crore 25, 4 lakhs, then 2.5 lakhs. How much it adds up to?
Up to here 1 crore 94 lakhs.
65, 69, 65, and this is 194. Correct? Please cross check.
Yes, sir.
So, how much is this proportion amount coming to for exempt supply? Yes, students, how much it is coming to exempt supply? Proportion amount 474,820, correct? Is it correct? 474,820.
Yes.
So I will get common ITC for taxable supply. So what is the balance? 115,180, correct? Is it 115,180? Students, please confirm. Students, is it correct?
No, sir, 2 lakh 15,180.
It should be 2,15,180.
Okay. And total ITC available. One is this common ITC. And is there any specific ITC for taxable supplies? Yes, this one. This ITC is fully for taxable plus RCM ITC. Correct? So total eligible ITC, how much it is? 278,180. So finally, computation of GST payable. Tax liability. Output tax. RCM tax. Let compute it here. Output tax 318, RCM 63. 318, 63 minus ITC available and adjusted. So this is the total amount which is available. How much I will adjust? I can adjust this full amount here. 278,180. So payable through cash ledger. This 63 is anyways payable through cash ledger always, because it is the RCM amount, and the difference of this is also payable through cash ledger. How much it is coming to? Is it 39,820? So total of this 63 plus 39,820.
1,02,820.
1,02,820. So this is payable through your cash ledger, and this amount is adjusted from credit ledger. Right? Is this clear to all students? Have you understood? Okay. Let us take a case study question. I think we did this, no? Yes. I want a case study question now. Okay, let us take this one. What is the question asked? Advise S&P Private Limited on the above issue with reference to provision. So it is advisory question. ठीक है. S&P Private Limited Coimbatore exclusively manufactures and sells product Z, which is exempt from GST. Wide notification issued under relevant GST. Okay. So it is exclusively manufacturing Z, which is exempt. The company sells product Z only within Tamil Nadu. Okay. And it is not registered under GST. So first question, students, is registration required or not?
Not required.
Not required, sir.
Why?
Not required because selling exempted product within the state.
And what if you would have sold it outside the state?
Then they need to register because it
No,
is.
no, he is engaged exclusively in exempt supply, so registration not required.
Yes.
Exactly. Even if it would have been outside the state, but since your product is fully exempt, still as per section 23, registration would not have been required. Correct?
Yes, sir.
Now, further, all the inward supplies of the company are taxed under forward charge. So my supplier is charging tax, so even I am not required to pay tax on RCM. So from both sides, I don't have to pay any tax. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow by 20%. So 55 lakhs plus 20%, 11 lakhs. So it will be 66 lakhs. Owing to the growing demand for the product, the company decides to increase its production capacity and purchase additional machinery for manufacturing Z on 1st July. Okay. The purchase price of the capital goods was 20 lakhs exclusive of GST. However, effective from 1st November, exemption available on Z was withdrawn. GST at the rate of 12% was imposed. The turnover of the company for the half year ended on 30th September was 50 lakhs. The board of directors wants to know whether they have to register under GST. What will be your answer? Whether you will have to register under GST? Students, whether you have to register under GST. Now see what they have given. In the current year up to 30th of September, you have already crossed 50 lakhs. So even you have crossed the 40 lakhs, which is available for supply of goods for not registering. So you have already crossed that. So the moment your supply becomes taxable, you will be required to take registration. So since my supply is becoming taxable on 1st of November, I am required to take registration, and maximum how much time I'll get? I'll get 30 days to apply. So answer is yes, I am required to take registration. Now, in case in the above question, SNP is already registered. Okay. With respect to certain taxable supplies being made by it along with manufacture of exempt. So, okay, they're assuming that there are some other supplies also besides Z. So you have taken registration, other facts remaining the same. Can it take input credit of additional machinery purchase exclusively for manufacturing Z? If yes, how much credit can be availed? So the second part of the question is assuming they have any other supply also because of which they are already registered. Now, they have purchased this machinery on 1st July. On 1st July, your product Z was fully exempt. So since it was fully exempt, that is why you could not take credit. That is, you have not taken credit. However, it is becoming taxable from 1st of November. Now the question is, if it is becoming taxable on 1st of November, can you take credit of this machinery purchase? Firstly, how much GST is there? GST is 3,60,000. Can you take credit of this machinery purchase, students?
Yes, sir.
We can take. You're sure?
Yes, sir, we can take.
Yes, what about others? Sorry, beta, not audible.
Sir, connection. Sir, is there is audible, sir?
Yeah, audible now. Please tell me, beta.
Sir, डिस्कनेक्टेड हो रहा है बार बार.
मेरे साइड से डिस्कनेक्ट हो रहा है?
हाँ. नहीं, यहाँ से हो रहा है.
मेरे एंड पे कोई प्रॉब्लम है?
अब ऑडिबल है सर, अब ऑडिबल है.
Okay. So the answer for the second question is yes. If you are already registered, then the answer is yes. But अगर हम ओरिजिनल क्वेश्चन के हिसाब से जाएं, जहां पे आप पहले अनरजिस्टर्ड थे और अब अगर आप रजिस्ट्रेशन में आ रहे हो, in that particular case, if we go by the original question, then credit is not available because section 18 deals with this scenario where you are converting from unregistered to registered. You are allowed to take credit only of the not capital, only of the stock items, that is raw material, WIP, finished goods, but not of capital goods. But if you are already registered and you are converting from exempt to taxable, but you are already registered, then section 18 says you are eligible to take even credit of capital goods. But क्योंकि आपने capital goods पहले थोड़ा use किया है, that is why full credit is not allowed. Now, what is the total ITC on this capital goods? It is
360,000.
Minus how much ITC I will have to forego.
5%.
See, I have been 5% is per month.
Per quarter, sir. Per quarter.
Per quarter. So how much machine I have used? I have used it from 1st July. So July, August, September, October. 4 months I have used because from 1st November now I am eligible for ITC. So I've used it for 4 months. Now 4 months means 3 months is 1 quarter. So 1 quarter completely I've used and 1 quarter partly I've used. Now what does the law says? You have to take 5% per quarter or even part. Correct? So where you have not used for full quarter also, still you have to consider 5% multiplied by 2 quarters, because the second quarter is part, but you will consider it as a quarter only. So total 10% you have to reverse. 10% of 36. How much ITC
will be 3,24,000.
How much? 3 lakhs 24?
24,000. Yeah.
This is the ITC which you can now avail. Right? Students, is this clear?
Yes, sir.
Sure?
Yes.
Great. Super. Give me some other good big question. These are all small questions. So this appears to be big. Let us take this one. So 24th sum. Now what is the question? We'll first read the question. You are required to determine the amount of tax, if any, to be deducted from each of the receivables. Oh, given above, assuming the CST rate, achha, something different. You are required to determine the amount of tax, if any, to be deducted from each of the receivable given. Will your answer be different if Manihar Enterprise is registered under composition? Let's see. At least by reading this question, I could not understand anything what is asked. So maybe after reading the details, we'll get to know. But something they're asking, how much is receivable? Let's see. So Manihar Enterprise registered in Delhi is engaged in supply of various goods services exclusively to government. Acha. So if you are supplying exclusively to government, there can be a challenge. What is the challenge? TDS. So maybe this question is aiming at TDS. Fine, we'll get to know. And persons notified under 51. Yes, 51 is TDS. So it has provided the information relating to supplies made, their contract values, and the payment due against each of them. Okay, that is why they are asking amount receivable. So it means this question is aimed at TDS. Now, who can help me with the TDS provisions under GST? Yes, students, who can help me with the TDS provisions?
TDS rate will be 2%, sir, for services provided
for
to government departments, agencies.
Services only or even goods?
Sorry, goods and services.
Both.
Yeah.
In all cases, or is there some criterion?
2,50,000 is the criteria. The contract value should be 50,000. 2,50,000.
Sir, more than 2,50,000.
More than 2,50,000.
And what is this 2,50,000? Can you explain?
Contract value. Contract value.
So each contract value, yeah, if you are given multiple work, all work combined 250.
So we have to see the contract value. If contract value is above 2,50,000, then 1% on whichever transaction we have done, on that transaction, we have to deduct 2% IGST.
I understood that, beta. My point is, you said 2,50,000 contract value, correct? Now, here, as you can see, multiple transactions are done. As you can see, different transactions are done. So my question was whether 2,50,000 has to be taken as, pay attention, combined contract value of all the transactions entered, or per transaction 2,50,000 you have to check.
Per transaction, and on payment due, we have to deduct 2%.
So if, let us say in my first example, the contract value is 260, correct?
Yeah.
Achha, one more thing, it is inclusive of GST. So another question comes is,
yeah, we have to deduct the GST bills.
So 250 that you will check is before GST or it is after GST?
Before GST, sir.
Good. So see, these are the minute points. Huh? So 250 that you have to check is before GST, first point. Second, 250 you have to check independently for each of the supply. Now, third point, whether this TDS has to be deducted on the total contract value or only on the payment, because here now they have one column of payment due.
Only on payment,
so whether
sir.
it on the entire 250 or only on the payment due?
Only on the payment.
Only on payment.
Super. So it means in all these transactions, first thing is clear, it is already with government. So that first step is clear that the transactions are with government where TDS is applicable. But we'll have to first check each supply whether the contract value exceeds 250, which is the pre-GST value. So first thing that we'll have to check. And if does, then out of the amount due, we will deduct the 2% contract value, and then we'll find out the amount receivable, which is the question. Correct? I hope it is clear to all.
Yes, sir.
Yes.
So let us go step by step. So first contract value, including GST, is 260. Correct? Is the GST rate given? Yes, it is 18. So we have to make a back calculation because this is including GST. What is the back calculation? 100 upon 118. Correct? Am I right?
Correct, sir. Right.
Yes, sir.
It would amount come
What
to
is the
2,20,000.
what is the taxable value? 2 lakh?
2,20,339.
338.
338. Correct? Now, if it is 2 lakh 338, whatever, is GST TDS applicable?
No, not applicable.
Not applicable. So what is the amount payable? Because the question is what is the amount receivable? So what I will say, what is the amount receivable? We have to give them the amount receivable. Na? Students, what is the amount receivable? Entire amount.
15.
Because if no TDS is applicable, they will have to pay me entire amount. Na? The question was, what is the amount receivable? So receivable will be now entire amount, no TDS applicable. Correct? Na?
Correct, sir.
Yes, sir.
Similarly, here. What is the amount, students?
2,50,000.
Exact, it is 250.
Yeah, it's exactly 2
Yes. Yes, sir.
Now, interesting question comes.
So no
If it is
TDS.
exact 250, is TDS applicable or TDS
No, no.
applicable when
No.
Not applicable. Only
You
if
are
they
sure?
2,50,000 TDS. will be
100% sure.
So it means again receivable will be entire 20. Correct? Na?
Yes, sir.
Third, supply of heavy machinery to public sector. Okay. Same. 100 upon 118.
It's 5 lakhs.
So now here TDS is applicable. Yes. Rate of TDS is 2%. So I'll deduct 2%. So what is the amount payable now?
500. No, TDS is 500. So 24,500 we have to pay.
24,500. Next.
Five lakh 50,000.
How much, beta? Sorry, can you please repeat?
5,50,000. sir.
Again, applicable.
Yes.
2%. How much it will come?
Comes to 49,000.
249.
Only 49, na?
Yeah, yeah. Correct.
Yes, sir. Yes, sir.
Now here, see, in TDS, what is very important is, can you all please mute? Yeah. Now, interior decoration of Andhra Bhavan located in Delhi. Now, what will be the place of supply of this? The place of supply of this is Delhi, because we are doing interior decoration service of the place which is located in Delhi. So as per the place of supply rules. For interior decoration of immovable property, the place of supply is the place of immovable property. Service contract is entered into with the government of Andhra Pradesh, who is registered in Andhra. Now, pay attention. We are registered in Delhi. The place of supply is in Delhi. If we are registered in Delhi and place of supply is in Delhi, what tax we will deduct? We will deduct C plus S. But my recipient is a person from Andhra Pradesh. Will my recipient get the ITC of the C plus S which I am deducting in Delhi?
No, sir, no.
No.
Now, understand this. When it comes to TDS, I can deduct TDS only, remember this, I can deduct TDS only where the place of supply is falling in the state of the recipient. If the place of supply is not falling in the state of recipient, I cannot deduct this TDS for the simple reason. If I deduct this TDS, even though TDS is applicable here also, because the amount definitely, sorry, this one, the amount definitely here will be coming above 250 only. But this is a very important point in TDS, that I can deduct TDS only when the TDS which I will deduct will be available as ITC to the recipient. Here the TDS which I have to deduct is excess of Delhi. Since the recipient is not a person registered in Delhi, the recipient will not be able to get the credit of this TDS. Hence, even though amount-wise TDS is applicable, TDS cannot be deducted over here because the recipient of this particular service will not be eligible to get the ITC. Is this clear?
Clear, sir.
Yes, Akshay, please tell.
So, sir, the TDS is dependent on the ITC availment, right?
ITC, actually, I'm using the wrong terminology, but it is not ITC because when I'm deducting your TDS, you will get it in your cash ledger, correct? You will, so actually word ITC is wrong because you're not getting ITC, you are getting it in your cash ledger. So answering your question, I can deduct TDS only when you can get the credit of that amount in your cash ledger. If you are from a different state and I'm paying the TDS in a different state, you will never get the credit and hence I cannot deduct the TDS. That is one of the provisions. I hope I'm clear.
Yes, sir, clear. Right.
Yes, Akshay.
Yes, sir, clear.
Great. Now, supply of printed books with postcards to West Delhi Post Office. Now here the special point is out of the total contract value of 972, which is our contract value, 7 lakhs is exempt. Now if 7 lakhs is exempt, for us the taxable value is not 972, it is 272. So if I do a back calculation of 272, how much amount I'm getting by this back calculation?
2,30,508.
Again, TDS not applicable because TDS cannot be done of exempt supplies because there will be no tax, so no TDS. Correct. Are you all getting all this?
Clear, sir, clear.
Next, maintenance of streetlights in municipal area of East Delhi. The maintenance contract entered into replacement of defunct lights, and however, the value of supply of goods is not more than 25%. Wow, wow. Now, again, you have to recall exemption entry. If you are providing any service,
exemption entry.
yes, if you are providing any particular service which is part of the function which is entrusted to the municipality under Article 243G or W, in that case, there is a specific exemption if the value of service does not include goods component exceeding 25%. Here they have given that presumption that in this service, the goods component is not exceeding 25%. Hence, this service entirely is an exempt supply. And if it is an exempt supply, again, there can be no GST, TDS. Correct? So where there is no TDS, the entire amount is receivable. So here the receivable amount is the complete amount. So my final answer would be addition of all these amounts, because the question was, I go back to the question, you are required to determine the amount of tax, if any, to be deducted from each, given the above, assuming this, and this is this. So this is the amount which is receivable, and these are the respective tax which I have to deduct. So basically here I'll be deducting 500. Here I'll be deducting 1000. So these are the only two cases where TDS is applicable, right? And then what is the other part? Will your answer be different if Manihar Enterprise is registered under the composition scheme?
No, sir, there will be no difference.
Yes. In short, if a supplier is under composition, whether TDS of that supplier can be deducted, that is the main question. The answer is yes. So irrespective of whether you are a composition dealer or a regular dealer, TDS wherever applicable would be deducted. In short, the above answer will remain same even if Manihar is a registered entity under composition scheme. This is clear to you all, students?
Yes, sir.
Excellent.
Yes.
So I hope today you all would have got a much deeper insight about the types of questions asked, the manner of approaching the questions, and I'm sure by the end of today's class, after dealing with so many practical questions, case study questions, you will be in a much better position to handle the exams. So I think with this, we can conclude today's session. If you all have any further doubts, please feel free to ask.
Thanks a lot, sir. Thanks.
No questions with anyone? Great. So thank you, students. Thank you very, very much. And please keep studying. I'll upload this for your further question reference. You can refer this question bank for your future practice also. Thank you. Thank you very
Yes,
much.
please. Thank you so much, sir.
Thank you, sir. Good night.
Thank you. Good
Thank
night.
you, sir. Good night.
Right. Good night all.
Thank you, sir.
Thank you very much. Ashok ji, we can close. Thank you. Good night. Sorry. अशोक जी, आप मुझे कुछ कह रहे हैं? हेलो. मैं म्यूट कर
गरीब